I've made over $400,000 from day trading. And if you just give me the next 10 minutes, I'll show you exactly how to 10x your trading profits. I'm going to be going over the fundamentals of trading that actually matter, my full strategy, and also a system that you would need to be highly profitable consistently. We're going to start a timer here. And if you look here, you can see that one of my biggest weeks was $56,000 from Top Step. Coming in over here, we have the Top Step payouts. And going over here, this is the part that most traders skip, and that is why they fail. Starting with the fundamentals, you need to learn the basics. You need to learn the terminology. You need to understand why the market moves the way it does. Otherwise, you're stuck in between. You're not understanding. You're just really just guessing and having no substance to why the market is doing what it's doing. You're basically just saying, I think it's going to go up. I think it's going to go down. When you start to learn the basics, you actually are able to understand why the market bounced there or why the market sold off. Moving on from the basics, if you can master one strategy, that's all you need in your tool belt to look for that and get really good at it. And just because that one strategy didn't work today or it didn't work yesterday does not mean that that strategy is skewed. Normally, it's just up to you to decide if that is the right way to implement that strategy. Hopping around from strategy to strategy can really hurt your trading. Moving on from strategy, because if we can't manage our risk, we could blow our whole account up in one day just because, let's say we take a couple losses in a row. If we're managing our risk effectively, one win can make back a whole week's of losses, or vice versa. If you're not managing your risk, one loss can wipe out a whole week of trading profits, and that is not the position that you want to be in. And so we need to be able to keep swinging that bat, and that's where managing risk comes through. After managing risk, we need to stick with that. If we're not following our rules, none of this is going to work. And if you are consistent with all of these things, there's no other option but to be profitable. And it helps you stay in line and not get emotional and thinking more off of logic rather than being emotional. When you're acting off of emotion in the markets, when you make mistakes, there's a cost to it. Moving on from discipline and consistency, I think this is the most important one. And that is to journal and review your trades. When you journal and can look back on trades that you've taken, it allows you to look at where your mindset was and what gave you conviction on entering that trade. And once you've journaled and reviewed your trades for a set of time, it allows you to look back on those days and you can find out what's working and what's not. Mindset builds the foundation, but strategy will give you the blueprint. With the strategy and the framework I just showed you, it's only a matter of time before you become a profitable trader. Wait for the market to sweep one side of liquidity, taking out retail and triggering institutional orders. And so I'll show a chart example of that in a second here. Once we get that liquidity sweep, we target opposing liquidity. We wait for one side to get cleared, and then we look for it to come to another pool of liquidity, either another high or low or a higher time frame gap, depending on which way the trend is going. Step 3, we place the trade. After the sweep, we confirm with lower time frame displacement and inverted fair value gaps. We put our stops at that most recent swing high. Now I'm going to show you a trade that I took today. We came down here and we swept liquidity. Notice how the market came through, wicked these lows. This is on an hourly chart. So we'll wait for the market to come down to this level. Okay, there's our liquidity sweep. Then we mark out our fair value gap, the gap between price that took that liquidity. Notice that price did not trade up into this area. Once we get a candle closure for confirmation, this is our entry point. So we didn't get a candle close until right here. For proper stops, you would have it at these lows and targeting some higher time frame liquidity pool, which would be right up in here. We inverted a fair value gap, stops at the most recent swing low, and targeting some higher time frame liquidity pool. And here's the truth. A strategy alone isn't going to make you profitable. Without a system, you'll never be consistent. So step 1 of my system is a pre-trade checklist. Did price sweep liquidity? If we have no raid, no trade. Once we've swept that liquidity, do we get that V-shaped momentum? Does price show you that it does not want to be in that area anymore? Are we creating bullish candles? Are we getting that sharp reversal look? Is price trading into an H4 fair value gap or some sort of higher time frame? Normally at those higher time frame gaps, there is liquidity in those areas. Next part of the system is risk management. You need a fixed amount you're willing to risk per trade. This allows you to keep swinging that bat, like I was saying previously. If today isn't your day, you set a daily stop of 2 losses. Once you've hit your 2 losses in a row, you quit trading. If you don't have some sort of system in place like this for risk management, you're going to blow up your accounts. You're just building bad habits by sitting there taking loss after loss. If you're not getting this pre-trade checklist, you're not entering trades. And if you do swing and that setup fails, that's okay. You managed your risk, it checked off your boxes, and you have enough capital to swing again. You don't want to ruin your whole account in one day. The market is here 250 some days of the year. Last part of the system is journal and review. We need to log our trades. We need to understand where we're going wrong and why we're doing what we're doing, so you can see where you were entering your trades. And I think it's very important to log your emotions. How were you feeling during that trade? Were you nervous? Were you confident? A track of those emotions can really help you understand the way you feel during your trading. I'm sure a lot of you are super tense when you're in your trade, not confident. Once you start journaling that and you have your system in place, you begin to be confident and you aren't feeling all stiff and tense during your trades. And so I think that that is very important to the system. Being able to journal and review so you can understand where and why you went wrong is huge. And boom, just over 10 minutes. If you guys want to see more like this, feel free to drop a sub. I'd appreciate it. And I'll catch you next time.